Hello, everyone. So, today is Monday, April 27th, and today I want to go over the action from the S&P 500, what happened today, and also talk about a couple of stocks that I picked out to add to my long-term IRA retirement portfolio. So not day trade stocks, not stocks that I'm going to be flipping tomorrow, but stocks that I'm thinking about holding long term. For me, probably at least these next couple weeks, and if not, a couple more months if the trade goes the way that I want them to. So to begin, we will start off with SPY, or the S&P 500. So this is the ticker symbol SPY. This is the ETF for the S&P 500. And we basically started off today. This is the weekly chart. I'll go over the weekly time frame and then the daily time frame. But we are starting off this week the exact same way that we've been going these last couple weeks. So again, this is the weekly time frame. From the top of all-time high before Corona, I have here in white 339. That was the top. We have the bottom of this COVID scenario at 218, and we still haven't topped out of this month and a half bounce now that's been going on. So the bulls are extremely healthy in this situation. The only way that we're going to top out is if we change the daily time frame bearish. So a lot of people online and on TV are saying that this could be a V-shaped recovery where we go straight from the bottom all the way back to all-time highs. I did not think that would be the most probable scenario to happen, but now that we're getting closer and closer, I think that is something that could happen. It's something to think about. So just watch out for a V-shaped recovery if obviously if we keep going up. So I'm going to go into the daily time frame and show you how strong these bulls are. So straight from the bottom, we have a daily trend change here. Boom, boom. Straight into continuation here with a little small, another continuation. And right now we're looking at the top of last week. And we made a daily higher low. And today we were just looking to either continue by breaking 287 or form a daily lower high below 287 and possibly form a daily equilibrium in between 287 and 272. We did break briefly, but with no bullish follow through. So tomorrow we'll see if we gap up open or if we reject from 287 and look for daily consolidation. Now, if we do start consolidating on the daily time frame and we don't continue, then the bulls have a lot of space to work with. They can form a daily higher low. They have almost 5.5% of space to work with. So bulls can pull back all the way down to 272, basically set that daily higher low, and then continue on that way. So the only scenario where we could call the top of that weekly bounce and then start looking for a weekly higher low would be if we reject from here and we form a daily higher low, a little daily lower high, and then break down. That would change the trend bearish. And then you could zoom out and say, okay, now we've hit a top, and now we're ready to look for that weekly higher low. Anything above 218 would be a weekly higher low if we do consolidate. So the bulls are incredibly strong in this situation. Not only the S&P 500 broader market, but also the tech sector is doing very strong. All of the major ETF sectors are basically holding their weight compared to S&P. They're all doing pretty well. There's none that are like doing horribly compared to S&P. Now, I mentioned in the beginning of the video that I was going to go over some of the names that I added to my long-term portfolio. And one of the criteria that I wanted to look for when I was going in for a long-term position was hopefully finding something that has pulled back a little bit. And I just feel like that is a safer play long-term than trying to go for something that's already bounced so high and give you less opportunity for a bigger profit. So not to say that the S&P 500 doesn't have a lot more room to go, but there's other stocks that did consolidate on the weekly time frame, and they did give me an opportunity to enter. And since the market is being so bullish, I figured that those would be safe plays. If the market continues to go up, hopefully those stocks will too. So we will start off with VNQ. VNQ is the real estate ETF, one of the main ones. So we have the high before Corona at 99, low of Corona at 55.58. We had a high of the bounce at 79.99. And unlike S&P 500, where we did not get this pullback here on the weekly time frame, we did on VNQ. So today we had a daily bullish trend change, which is why I can now mark the bottom of this pullback on the weekly time frame. And now we're looking to either change this weekly trend bullish by breaking 79, or we would look for a weekly lower high below 79 and pull back and then hopefully break. So for me, this is a better play than going into an S&P 500 that has already bounced so high and hasn't changed the weekly trend yet. This has already set a weekly higher low, and now looking back up towards the high of the bounce and trying to change that weekly trend. All right, next one is Disney. Now, Disney has not seen the huge rallies that Netflix has. It's not in the same category, but it sort of is now because of the streaming. But Netflix did have a little bit of a pullback on the weekly time frame. So this equilibrium looks like the high of Disney at 147, low of Corona, and high of the bounce at 107. And today we had a daily trend change, which could mark this as our weekly higher low. Even though it's small, we didn't get to pull back a significant amount. It was still enough of a pullback, in my opinion, to call that a weekly higher low. So I will zoom into the daily time frame so you can see that trend change. So on the daily time frame, we had the low, the high at 102. We held support at 99, and we flipped bullish. So that marks that weekly higher low, and then that's what basically triggered me into buy Disney at 102. And now, if the bulls are going to pull back at all from 106, they can form a daily higher low. Anything above 99.13 keeps the bulls in control. So I'll keep my position and keep adding to it as long as we stay above 99.13. And then we have resistance. Next resistance is at 107.99. So those are the two levels to look out for Disney. If Disney does pull back down towards 199 level, that would be a good opportunity, to buy in. Third name is Royal Caribbean, RCL. So the airlines as well as the cruising industry, they have had probably the worst beating in terms of stocks for coronavirus. So this has been a stock that has been tightening up on the daily time frame. So you see the bottom at 19, high of the bounce at 49. So very volatile stock. We had it pulled back. We had a higher low at 22.25. And then we saw another lower high at 45.12. And literally over the last 2 weeks, it's been getting tighter and tighter. So if you do put the lines, you have a higher low, a lower high, another higher low, another lower high. And then we broke today this 2-week long little equilibrium. And that's what also got me into Royal Caribbean. Anything above 33.25 keeps the bulls in control and keeps the bullish trend intact, basically. So as long as Royal Caribbean stays above 33.25, I will most likely keep adding to the position and trying to build it up. If 33.25 breaks, there's a higher chance that we'd start revisiting the lows around $22 and $19. So we need these daily higher lows to hold and then look up towards the highs of the bounce for the same thing with the last two stocks that I mentioned. Number 4 is PENN Gaming, PENN National Gaming. So PENN is also a stock like the last one, like Disney, that had been tightening up in this daily time frame, where we had low of Corona at $3.75, also very volatile stock. High of the bounce at $15.97. We had a low. And over the last also week and a half, we have been in this tightening range. Not only the fact that we were about to break out from this range, but PENN is an interesting name for me because of the Barstool acquisition that they got. They got like 36% of Barstool, something like that. And Barstool is a great company. They're doing a lot of innovative things in sports for millennials especially, and they're going to be coming out with a Barstool sports betting app in the fall, I believe, when sports comes back. So hopefully where I bought, we don't revisit these levels around $12. If we do, I might sell the stock because this stock could go below, back down to $8 and $3, and I wouldn't want to hold it then. But buying it at $14.14 is good. It was right before this little explosion today. We got a 15% bounce, but we closed, I think, at up 9%, something like that. We did close under resistance, so tomorrow we're looking up at $15.97 resistance. Hopefully we break that. And anything above $12.96 keeps the bulls in control, keeps the bullish trend intact. So as long as PENN stays above $12.96, if we do get a pullback over these next few days, then I will re-add to my position and hope for this to play out in my favor. Last stock is Love. Love is probably the riskiest one out of the 5 that I mentioned because it looks the worst on the chart. The other 4 stocks I made the decision to buy after seeing that the daily trend had changed. This is a bottom fish trade, not trade, but it's I'm buying it as a bottom fish in the sense that I'm not waiting for it to I'm not waiting for the trend to change. I'm buying it close to the bottom in anticipation for the trend to change. So bought it basically where it's at now, 29.20. It's looking good. Oh, and this is Southwest Airlines. If I didn't mention LUV, the reason I picked Southwest over some of the other airlines is because, like JetBlue and American Airlines, some of these other airlines are not in the best situations financially. They have a lot of debt and have borrowed a lot of money from the stimulus package already thing, and on the other hand, Southwest Airlines, from what I read online, they are more cash flow positive. They have more money in the bank. They're not in crazy debt. So hopefully, if I'm thinking long term, Southwest Airlines is the place to be, and that's where I bought today. So it is looking better after hours in the extended market. Yeah, it's going up. So tomorrow we'll be looking at the high of today, which was 29.91, and if we break that, that will be very bullish for Southwest Airlines. And this is one of those stocks that if it starts rallying, it could be a very good profit, because mostly exactly like Royal Caribbean at the lows, or not at the lows, but it has a lot of opportunity to grow compared to a stock like, if you're buying the S&P 500, is almost at the top, while these airlines have 70%, 100%. Obviously, the reason that they're this low is because they're weaker compared to other stocks that are rallying. But if you're looking in terms of the future and looking for a long-term investment, once the market starts seeing optimism that tourism will start again, hopefully these tourism stocks like the airlines and the cruise ships will start rallying again, and that will help my portfolio. So that was it for tonight's video. Tomorrow, like I said, we'll be looking to see if SPY continues its bounce. And if you guys want to follow along, I will be live on Twitch in the morning. So go on my Instagram and click the link, and I'll be live then. So if you want to, come say hi, and I'll see you there.